Hey everyone, hope you're doing well. Drew Creekmer here. I'm the Director of Advisory Services here at Creekmer Wealth, and today I'm flying solo on this edition of the Deep Dive. John was unable to join me. He's in a number of meetings today. So I just wanted to connect with you all still, just walk through a couple of really exciting or new pieces of information for you all as it relates to taxes and your workplace retirement plans. Now, on the tax front, I know you are all aware that a number of weeks ago, there was a large legislation that was passed out in Washington, D.C. Some people are referring to this as the Big Beautiful Bill. But in this legislation, we've begun to receive a lot of clarity as to what our tax code is going to look like in the years ahead. And our planning team, led by Clark Randall, who's been a certified financial planner for 30 plus years, they've been digging into this bill and just really beginning to identify a number of great planning opportunities or even areas of clarity that we can provide to our clients. Just a couple of things for you all to keep in mind. We see for sure rates and brackets generally continuing in their same format into the years ahead. That was a key cornerstone of this bill, ensuring that we're not going to see an increase in rates. And outside of an annual inflationary increase on income tax brackets, those are going to continue in their same format. Really what that means for you all is you're likely going to continue to be in the same tax bracket that you are today. Unless there's a major event in your life, like selling a business, or maybe your required minimum distributions are starting, for the most part, you should not see a substantial increases in your taxes. And in fact, a lot of folks are actually going to see a decrease in their taxes. Now, one of the other key elements, which there's been a lot of discussion around this one, but it has to do with the standard deduction and how that impacts your Social Security benefits. Now, initially after this bill was passed, there was a lot of conversation saying that Social Security benefits are no longer going to be taxed. Now, the reality looks a lot much different beneath the surface, right? Social Security benefits are still going to be taxed. However, a much larger standard deduction for individuals over the age of 65 has been introduced, which will allow most individuals, I think it's about 90% of people receiving Social Security benefits, those individuals are actually not going to have any additional taxation on their Social Security benefit. I think one of the biggest things that we're going to see come out of this bill is that the vast majority of Americans are going to continue to utilize the standard deduction. Unless you still have a mortgage or you're paying substantial state and local taxes, you're really not going to be itemizing your deductions. Now, that said, there are a couple of other interesting things here. One of the items has to do with charitable deductions for non-itemizers. With the 2016 tax law, one of the unexpected consequences of that tax law, by increasing the standard deduction, many individuals really decreased or stopped giving to charities. And so in order to try to address this issue, a additional deduction, even if you're taking the standard deduction, an additional deduction of $1,000 or $2,000 if you're filing jointly has been introduced, even if you are taking the standard deduction. So if you are giving to charity in any form or fashion and you take the standard deduction, if you're a married individual who files jointly, you'll still be able to deduct up to $2,000 off of your income tax returns. Now, there's a lot more detail as it relates to this tax bill, especially if you're selling a highly appreciated asset, maybe a piece of real estate, a large stock, maybe you're selling a business. If you're in that camp or you're going to be in that camp in the near future, some additional tax planning could be incredibly advantageous to you. There's just a lot of minutia around this bill, but there are a number of different ways that you can leverage the tax code as a tool to help keep more money in your pocket. So what I would encourage you all to do, if you're really just curious, hey, has anything changed with my situation on the tax front because of this bill? Or you know what, I got a big life event coming up where I'm going to be liquidating an asset. If you're in that camp, I would encourage you to reach out to your advisor. Our team is running tax reviews for every single one of our clients who reaches out to them. Typically, we charge a couple $1,000s for this. Right now, we're charging $300 to have our tax team and our financial planning department just do a quick review of your tax returns. If we can't find at least $300 of additional tax saving to you, we will actually give you that $300 back. So I would encourage you all to take advantage of that and reach out to your advisor. Now, a number of folks over the years have also said, hey, I'm still working. My largest individual asset is my workplace retirement plan, my 401k or my 403b or even my 457. And it would be really great if you could help provide some additional oversight on that or even manage the investments for me. And as you all know, We live in a highly regulated world, especially in our industry and financial services. And so it's taking us some time to be able to develop a suite of tools to help deliver that to you. If you're an individual working at any workplace retirement plan, we actually now have the ability to service that plan for you and help give investment oversight and recommendations to you. So I would highly encourage you that you take advantage of that. Reach out to your advisor, and they'll walk you through the 3 different options that we have available and help decide which of those 3 options really makes the most sense for you and your situation. And what I've seen over the years, I've been doing this now well over a decade at this point, which is kind of crazy for me to say, but absolutely love doing it. But what I'll say is, what I've seen is the individuals who really get the most squeeze out of their workplace retirement plan are the ones that have the most flexibility in retirement. And ultimately here at Creekmore Wealth, what we do is we help people identify their goals for their life, both financial and otherwise, and help them develop a plan to ensure that they go out and achieve those goals by using the tool that is money to live out their ideal lifestyle. And what I've seen is that the individuals that have found a way to contribute consistently to their 401k, make sure their investment allocation is set up appropriately for what their stage of life is and what their goals are, those are the individuals that tend to have the most flexibility financially in retirement. And so I would encourage you all, take advantage of that, have an initial conversation, and maybe you don't need anything at all or any help there. But we love giving second opinions and providing new ideas and ways of thinking around your financial life. And so we'd be more than happy to walk you through just a couple of things for you to think about with your workplace retirement plan. So that's all I have today, folks. If you have any questions, whether that has to do with your taxes or your workplace retirement plan, I would encourage you, reach out to your advisor. Make sure that you're leveraging all of the tools that our firm provides to our clients. We're continuing to develop the ways in which we are able to service you as our clients financially, and now have the ability to do so in pretty much every area of your financial life. So make sure you're trying to engage with us as much as possible, and our team's here to stand by and help in any way that we can. Thanks for the time, y'all, and I'll talk to you soon.